Most drivers over 50 have no idea this is happening, but your car insurance actually follows a pattern. In your 50s and 60s, your rates usually go down. Insurance companies see you as experienced, more predictable, lower risk. That's why this is often the cheapest time for coverage. But then, something changes. Right around your late 70s, into your 80s. Those same rates can start creeping back up again. No warning, no clear reason, just a higher bill. And that's where most people get confused. Because at this stage, you're probably driving less than ever, avoiding busy roads, being more cautious. So why would the price go up? It comes down to how insurance companies actually work. They don't price based on you personally. They price based on data, large groups, patterns, things like reaction time, vision changes, and accident trends across age ranges. So even if nothing about your driving has changed, your rate might. But here's the part they don't make obvious. That number isn't fixed. Because every company calculates risk differently, which means two companies can look at the exact same driver, same car, same history, and give completely different prices, and this is happening every day. The problem is, most people never see those differences, because when they try to check, they run into the same frustrating system. Forms, long forms, repeating the same information, over and over again. Different sites, same questions, and after a few tries, most people just give up. They stick with what they have and assume it's normal, but it might not be, especially if you've made one of these common mistakes. Letting your policy auto-renew without checking it. Keeping coverage that no longer fits your car. Not updating your mileage after retiring. Or never asking about discounts that may apply to you, because there are actually quite a few that many drivers miss. Things like defensive driving discounts, low mileage discounts, bundling policies, even discounts tied to memberships or vehicle safety features. And here's the key. Most of these aren't automatically applied. You have to ask. If you don't, you could be paying more than necessary without realizing it. Now here's where things really open up. Different companies are better for different types of drivers. Some are more competitive for people over 50, some for retirees, some for low mileage drivers. Some even offer pay-per-mile or flexible coverage options where you're not paying for time you're not even driving. So the best company isn't universal. It depends entirely on your situation, your driving habits, your location, your coverage needs. And that's why guessing doesn't work. You have to compare. But instead of trying to do all of that yourself, there's a simpler way. A lot of drivers now just make one quick call and have someone check multiple options for them based on their situation. No filling out 5 different forms, no jumping between websites, just a quick, simple way to see what's available. And the best part is, there's no pressure, no obligation, you're just checking. Because at the end of the day, you won't know if your current rate still makes sense unless you actually look, especially if it's been a while or your driving habits have changed. So before your next renewal shows up, take a minute and see where you stand. Go to getrightinsured.com/GK and check your options now. Or call 1-888-240-2921 to get a quote.